Hi there, Serial Trader here. Let's check in with the major US indices. Alright, so another nice update today in SPX. And we'll just start off with this Elliott wave chart. And as you can see, this contracting triangle wave 4 interpretation continues to gain credibility here. And if we really do have that E wave in place and that large degree wave 4, then there's significant upside here, certainly over the coming weeks and months. And this D wave extreme, I certainly want to see that get taken out sooner than later. And it's nice to see that we actually broke above this BD trend line. That's an early indication that the triangle is complete and that we're now thrusting out of it. And short term, if we go into the hourly, I think the hourly is quite appropriate for this. Let me just hide the volume there. It definitely looks like we have a impulse wave to the upside. And in yesterday's video, I recall highlighting that it looked like we had an impulsive looking move up. And I think I left it somewhere like that. Basically, we had wave 4 in place or nearly so. And that we were going to be, heading up in wave 5. And well, today... Let's drop the degree down here a bit. Today certainly followed through with that anticipation, and we've had another move up to the upside. Now, just because I can count 1, 2, 3, 4, 5 up, it doesn't mean that this is complete and done going up, and that we're going to have our requisite correction down before another impulse wave. This could extend or have a very shallow pullback and then start another impulse wave or whatever. But the point is the trend of one larger degree than this is now up because we have 5 waves up off the bottom. So that's definitely a positive development for the bulls. And also a positive development once we're looking at that big picture and we see that we have what can be considered a completed Elliott wave correction in that contracting triangle. So looking real good here. And, again, never want to get too excited, but if I was a betting man, and I certainly am, I would say that we've seen the lows of this pullback or correction, whatever you want to call it, and that we are on our way to new highs. Not straight up, of course, but higher highs and higher lows at this point, I would expect. But we shall see. Now, let's move on to our candlestick chart. So I've just drawn the same BD trend lines on the candlestick chart, just so you know where we're at. And okay, so we had a couple doji days, Monday and Tuesday, but again, I pointed out yesterday, still above the T line and the 3T line for that matter, so nothing concerning about them. And that was after our bullish engulfing, which engulfed 3 prior candlesticks real bodies, so that's a strong signal, indicating the next 3 to 5 price bars would be in that direction. And so far, we have 3 price bars into this, and we're certainly heading in the right direction. So candlestick worked well there. Elliott wave certainly worked well there, and the two together work even better, obviously, because they just add confidence to the forecast. Now, at this point, we're well above the T line and actually well above the 3T line. We're starting to approach this resistance level, so we'll see how it reacts there if it gets there, and that's 27.1749. Now, if we get there, slightly break over it or just slightly stall before it and have a little pullback, that's perfectly normal. And short term, it looks like we're due for a little correction here possibly, or we might just smash right through and this impulse wave could extend. As I was showing the other chart, it is an impulse wave here off the bottom, but the bottom line is should be higher highs and higher lows. So bullish trades that you've been eyeing up or considering over the last few weeks, it's probably time to start acting on some of those or looking to do so right away. And let's move on to the Dow Jones Industrial Average. The Dow, same thing, very similar really, and also the Dow is also having its own little short-term 5 waves up. I mean, if I go on the, let's say the 10-minute chart here, see, you can see that. 1, 2, 3, 4, 5 up. And within 5, looks like maybe a 1, 2, 3, 4, waiting for a 5th of the 5th. So still some near-term upside left here, likely. And then possibly a little bigger of a pullback before our next impulse wave. But Dow well above the T line and 3T line, and above the 50-day moving average as well now. and closed well above it. So that didn't provide the resistance that some people perhaps thought it would. So Dow looking strong. NASDAQ composite. Now this is actually the strongest indice right now, because that doji star high that we haven't broke yet on SPX, well, the NASDAQ had a similar version of that. And we've gotten above that. And that was 73.19.58 on the NASDAQ. And we went as high as 73.44.80 and closed at 73.39.91. So very strong tech. And I would say tech will likely assume a bit of a leadership role again to the upside, or certainly appears that way, looking at the NASDAQ. So that's looking good. And the volatility index, the VIX. Okay, so VIX is dropping right off. And that's actually bullish for stocks. If you look back in VIX's long-standing history, stocks tend to rise quite nicely when VIX just remains in a benign state. And then typically VIX spikes indicate spike lows in stocks and actually good buying opportunities. And the only thing that's really problematic for stocks is when VIX is in a defined uptrend of higher highs and higher lows. And that typically means stocks are making lower highs and lower lows, because they're essentially moving in opposite correlations there, inverse correlations, if you will. So certainly nothing concerning for VIX, and actually it's looking quite bullish, being in this non-eventful state. All right, that should be it for the regular market update. Trade well, everyone. Hopefully it's been a good week so far, and will continue to be. All right, Serial Trader signing off.